Welcome to This Week This Morning, the weekly video that gets you up to speed on the week's most important developments for your business and your taxes. For such a wild year, it has been a rather quiet week in terms of economic relief and tax changes. The Fed, however, did launch its portal for lenders to register for the Main Street Lending Program, so businesses should be able to apply for loans starting next week. We'll be keeping an eye on that, but what I really want to focus on today is the fact that the July 15th filing deadline is fast approaching, which you're probably aware of even if you've been self-quarantining in an underground bunker. So what should you be aware of as the deadline approaches? Number one, keep in mind that Q1 and Q2 estimated tax payments are both due on July 15th. If your business is not profitable and you don't anticipate it being profitable in 2020, you don't need to make an estimated tax payment just yet. If you're unsure about what the year will look like when it's all said and done, just make sure that you're paying in 110% of your 2019 tax evenly throughout the year for safe harbor protection. Number two, if you need to open up some free cash flow to make your estimated tax payments or to pay any remaining balance on previous tax years, you can defer the employer portion of FICA taxes even if you received a PPP loan. Also, interest rates are at historic lows, so a payment plan with the IRS isn't a bad idea either. Number three, I've said this before and I'll say it again. Be mindful of whether you file your 2019 federal tax return because you could reduce a potential second stimulus payment if your income went up in 2019 compared to 2018. Number four, individuals impacted by COVID can take distributions from retirement accounts of up to $100,000 without the normal 10% penalty, and the income tax from the distribution can be paid evenly over 3 years. You can repay the distribution without impacting the amount that you'd normally be able to contribute, and then also get a refund on any taxes paid on the distribution. Alternatively, you could take out a loan for up to $100,000 on your retirement accounts with payments deferred by up to a year. And last, number five, if you have an NOL or net operating loss on your 2019 return, you should strongly consider carrying that loss back to previous tax years. Thanks to the CARES Act, you're allowed to carry the loss back 5 years with no limitations on taxable income. Previously, you had to carry it forward and were limited to 80% of taxable income. So if you'd like to dive deeper into any of these topics or any other changes for tax year 2020 brought about by COVID-19, reach out to your Dark Horse CPA. See you next week.